is how many available ounces of silver there are for delivery in the COMEX warehouse. Now that has dropped from about 150 million ounces a year ago down to about 35 million ounces in the last 2 months. And this, there's available silver and then there's registered silver. Available silver is what's available for delivery that you can take against a contract expiring. Registered silver is silver that the warehouses have in the stored at their warehouses, but is not available for sale. And we've seen the available amount of silver drop dramatically and close to a tipping point, because the U.S. Mint can make 25 million ounces of silver eagles alone in a year, and then they've made it in some months when demand has been really high. Now the production is impacted right now. On big years, the U.S. silver eagles, there have been 45 million made in a year. So we are seeing a potential tipping point in what is available in the COMEX warehouses. And if there's going to be a surplus of, say, 1,000-ounce bars this year, that would help to buoy that back up and maybe take the pressure off. But if we do get to a full tipping point, because of the offtake of silver has been so strong, silver has explosive potential, $30, $40, $50 an ounce relative to gold at these numbers. Because I think gold is close to an all-time high, where silver is still half of its two previous all-time highs of about $50 US.
Yeah, it's been bouncing off the $24 level. Like if you look at the chart of the last 30, 45 days here, it just ran up 24, bounced off, 24, bounced off. Any explanation? I'm not a technical analyst, so any indication why that might be? Why is that level so important?
Well, it's just, support and resistance on the charts. And we got a lot of computer trading these days. So the algorithms, I can literally watch the computers trade the metals on the COMEX exchange, and tell, gold's going to drop $5 in the next 5 minutes. And you got to be right on it, because it'll drop and it'll buoy up a little bit, and then all of a sudden it'll plunge. You can see it coming. So these are algorithms that are doing a lot of trading. So when you get a big run like we've had, there's some natural profit taking. Fibonacci numbers come into play. 36% retrenchment from a high in the short term, 18%. So I think we hit pretty high numbers pretty fast, and now we're seeing profit taking, but we're seeing support about where we should. In gold, it's $18.50, and silver would be about $22.
No, fantastic. It is looking good. And you used the word correction. Fortunately, I was I don't know. I'm still skeptic. Maybe I've been hit over the head way too many times in our sector, especially being involved in junior mining stocks and in the gold space over the last 12 years. Too many false breakouts, too many false hopes, I guess. So I always appreciate your insights there, Dana. Where can we find more of you? It's been super insightful speaking with you. You have a blog, I think, as well.
Well, we have our website is our company's American Gold Exchange. I think you can see my web address, www.amergold.com. My head is blocking it a bit. That's where our website is. We have a YouTube channel for American Gold Exchange where I've now been putting out videos of market commentary. We used to do email market commentary and writing, and the market was moving too fast and too sharply through all the changes the last couple of years. So we had to go to a video format so I could do it more quickly, because I'm a slow writer. I'm a bit faster talker. But I do think, it's going to be choppy, and, we're not out of the woods yet. We could see prices go a little lower. It all depends on bond yields. Really follow the U.S. bond yields, the 10-year, the 20-year, and the 30-year relative to the 2-year. We're in a big inversion right now, which signals a recession in the U.S., which we haven't seen yet. But the bond yields are really going to be the key over the next 3 to 6 months. Follow them. They'll lead the dollar and U.S. economic news.